Welcome to Get Your Mind Right, Boots on the Ground, where we spotlight professionals in the field who have overcome challenges and how they work through them. Their stories offer real-world insights and tips for thriving in today's competitive landscape.
Good morning, and welcome to Get Your Mind Right, the world's only podcast devoted to merchant services and digital marketing professionals everywhere. With me today is Conci. I almost said no, Conci Yoder. She's a newlywed.
Yes.
Yeah,
Thanks for having me.
Well, thanks for being here, Conci.
Of course.
So for our listeners out there, Conci is an underwriting and risk expert, and that's what we're here to talk about today.
Yes, sir.
I'm going to jump right into it. I've accumulated burning questions for my listeners here. And the first thing they want to do is get an introduction to chargebacks. What's a chargeback, and why should their merchant not even less care about it, but why should they even be aware of it?
Okay, so really first thing, a chargeback, it's a transaction reversal either initiated by a bank or a credit card issuer or a customer, typically when their customer disputes a charge on their card or their bank account.
Okay.
Yep.
Okay.
Yep.
So what happens when a chargeback is affected?
So when a chargeback is prompted by a customer, they will alert their bank or their card brand, whichever they prefer, and they will say, hey, this transaction does not look like something I'm aware of on my bank account. What is this from? If they want to submit a chargeback against it, then they will inquire, well, why did I get charged this amount? This isn't accurate. This isn't the right amount. The bank then reviews that with the card processing company, as well as further parties in relation to it, depending on where they take it to.
Okay.
The charge is then reviewed and then taken back to the issuer of the transaction.
Okay. So there's some definitional things out there, and I think this is really useful to people that, well, even people spend in the industry a while, like a retrieval request.
Yes.
What does that mean?
So retrieval request is really the first kind of notch in a chargeback process. The retrieval request is really just an additional information request from the merchant, really, who they submitted that chargeback against. So all merchants, when a chargeback occurs, they actually get a retrieval request before the actual chargeback case is fully in play.
So what's that look like?
So they get a letter in the mail. It is very similar to what the chargeback letter will look like. They pretty much get a letter in the mail stating, hey, this cardholder submitted a chargeback for this transaction on said date, said time, said card. They're stating that this is not an accurate charge on their card. Can you provide us with more detail on the transaction in question?
Okay.
So really, it's just kind of the ball that gets everything rolling on a chargeback.
So, like, what's your experience with merchants? Like, are they watching out for that sort of thing? Those letters, do they respond to them?
They should be. They definitely should be.
Okay.
I do know of some merchants that don't keep a close eye, but after being hit with a couple of chargebacks, they have begun to put new processes in place to where they actually do monitor their chargebacks and they check that reporting daily, which every merchant should be doing.
But they don't until they start feeling pain because
Right.
they've got a million other things they're doing.
Right. Exactly.
Gotcha.
Exactly.
Okay, so we're in term time now.
Okay.
Representment.
Okay, representment. So that is the process of proving the transaction is legitimate and the chargeback claim is false. So that's really the merchant saying, nope, this is accurate. You guys came to my store. You bought this stuff. This is an accurate charge on you.
So we talk about terms of winning this chargeback from the merchant standpoint, because you're always on the side of the merchant here.
Correct.
Like what kind of advice are you going to give the merchant on this point?
So you'll probably hear me say this a million times when we talk about chargebacks and risk in general, but the more documentation, the more detail, the more information you can provide, the better.
Okay.
Anything you have on the transaction in question, any documents, communications between you and the customer, anything that they can provide showing that it's an accurate charge should be provided for that chargeback response.
Gotcha. Okay. Give me some examples of what some really strong evidence would be from the merchant.
Signed invoices. First things for sure. Signed invoice. If you have a customer coming in making a large sale, now I don't run a business, so I don't know how that goes. But I would think if I had customers coming in making large purchases, I would want a signed invoice, a signed agreement of them agreeing to pay for that item, whatever it is. Signed invoices, any receipts, really. Receipts can be enough proof sometimes, depending on the scenario and the case. But any communications you have between yourself and the customer, I always suggest providing those, like email chains, confirmation of delivery, shipping confirmation. Those are great to have as well.
Okay. Okay, so I'm going to throw two terms at you at once here. Pre-arbitration and arbitration.
Okay, so Pre-arbitration, really kind of going to the end of the line in the chargeback process.
Okay.
Pre-arbitration is basically when a chargeback case occurs and you have a customer and you have the merchant. Customer submitted, hey, this is the wrong charge. I shouldn't have been charged this. Merchant responds, they provide all the documentation. They say, no, you should have been charged this. You're in my store. Here's everything showing that you bought this item. Then the chargeback case is actually won in the merchant's favor, right? So we love that. Merchant wins the money. They win the case. It's over. Customer gets alerted that the merchant won the case. They lost that money. They can actually submit for that to go into pre-arbitration, which is really, in short terms, it's an additional review of the chargeback case. It pretty much reopens the entire case and puts it up for another review, puts it through another review with a little bit higher up escalated team as well. And once pre-arbitration occurs, once that pre-arbitration decision is made in the arbitration time frame,
right,
that's the final decision.
That's it.
That's okay. Arbitration. That is the final last call on a chargeback. No matter who wins at this time, it's done.
So who are these arbiters with the ultimate authority?
So really it goes directly to the card brands. Most of the time, the card brands will actually do their own kind of separate review of the chargeback case. So just a little extra set of eyes on it besides the processors, regular chargeback teams, and then the banks, they've got their teams reviewing as well.
Yeah, that's amusing. These arbiters are like wear black hoods to work.
Oh,
and they're in a darkened,
you think
locked
so?
room.
Yeah. Nobody can have contact
No,
with them.
no direct numbers or
no,
anything.
Never a direct number.
I totally get this. So when we're talking about this whole process, Conci, what are we looking at from a merchant standpoint on the time frames and what the responses are expected out of them?
So time frame normally for a chargeback is about 30 to 60 days, depending on the case, depending if they go into pre-arbitration and arbitration. Merchants normally have about 30 days to respond to a chargeback.
Okay.
So they are allotted a month to provide a full response.
The clock's ticking on you.
The clock's ticking, but a month is a good amount of time for me, at least I would think. A good amount of time to gather everything you need for a response.
Yeah, if it's any amount of money whatsoever, I'm going to spend the time to do that. That's a reasonable time frame.
Exactly.
Okay, so I made some notes here on the different types of fraud.
Okay.
There's just not your plain old garden variety fraud here.
Oh, there's all sorts.
Yeah, we do. There's true fraud, friendly fraud, and merchant error. So talk to me about these and what the ramifications are.
So true fraud is true fraud. It is unauthorized charges against a credit card, normally done by someone, a scammer, a card tester, someone who's stolen card information, identity theft even. That's your true fraud. That's what you expect when you hear the word fraud.
Yeah. That's the rodent class fraud.
Right, exactly. Gotcha. Those are the scumballs,
Yeah.
But you also have friendly fraud. Friendly fraud's it can be dependent on the scenario. Friendly fraud is normally when customers report valid charges as fraudulent. So it doesn't really sound very friendly. No, it doesn't sound friendly, but that is what is considered friendly fraud.
Give me an example of a friendly fraud.
So I come into your restaurant, I spend $50 on dinner, and then I wait a couple weeks, I go to the bank, I look at my bank statement, and I say, I don't really have the money for that dinner. I shouldn't have went there. I'm probably not going to pay for it. So I'm going to go charge that back.
So how to get the name friendly fraud then? Do you know?
No, I do not know, but it is not friendly. I wouldn't consider that friendly fraud.
It could legitimately, though, someone made a mistake, or maybe the doing business was different than the name of the place they were familiar with.
Yes, I've seen that occur. So yes, merchants, if their DBA name's listed on the customer's bank account, they may not recognize them as that name compared to what name they saw on the menu or at the sign when they went to the location. So it has occurred where, the bank descriptor has caused a discrepancy and caused a chargeback.
Sure, I get that.
Yeah.
So the last one was merchant error. Tell me what that's about.
So merchant error, it is what it is, merchant error.
Yeah.
Merchant accidentally double charged a customer. That's something we see pretty often working with chargebacks. You could also have merchant error where they were inaccurately charged. Maybe they didn't double charge them, but maybe they charged them the wrong amount. Maybe I should have been charged $70 and I was charged $150. It's really just little errors like that can be fixed, that can be corrected. And most of the time they are.
And those are probably easier ones as well.
They are, yes. So when instances like that happen, you can kind of have a, the merchant can do what they need to do to fix that. They can refund it if they need to. If the customer still did a chargeback, then they would just provide proof they refunded it.
Okay.
That's kind of the resolve on that.
I know there's lots and lots of merchant services professionals that are really good in this industry, and this is kind of a nebulous area for it.
Yeah.
So I'd kind of like you to freestyle rap here on what the financial cost is to the business, what the reputational impact is,
Okay.
and just overall how this can or will, I should say, adversely affect a business.
So, really, first thing that comes to mind with a negative impact of chargebacks is it could negatively impact the merchants, their rating, how they represent themselves to other processing platforms and to processing platforms. I know our processing platforms all have a 1% allotted chargeback threshold.
Oh.
If merchants are over that 1%, then they get to talk to me about a risk hold because they're being reviewed for the increased chargebacks.
How many merchants even know that's a thing?
Not many.
So that's a big deal.
Like
Okay, how many people in the industry that are out selling merchants? Talk to them about this. Not many.
No.
Okay, it's not a problem until it's a problem.
Exactly.
And then it's a problem.
Exactly. And it's not a fun conversation to have.
No.
But I'm not on sales, but I think it's a conversation that should be discussed.
Yes.
Because it could deter a lot of heartache.
Yes.
For merchants. But cost wise, it's all dependent. It depends on there are fees that are included with retrieval requests and chargebacks. So if you get a retrieval request, you're more than likely going to get a chargeback request, and you're probably going to pay the $25 fee a piece for each of those. And then arbitration and pre-arbitration that gets up in the hundreds and thousands if that occurs. So definitely don't want to get to that point in a chargeback.
And a merchant, they just cannot be spending their time fighting chargebacks, right? They've got a business to run.
Exactly.
Okay.
Exactly.
Well, folks, that's all the time we've got for today. Conci is coming back on our next episode to talk about the chargeback process. Conci, this was great.
Yes,
a lot of information there. So for John Johnson and Conci Nall, this is Get Your Mind Right. See you next time.